Good evening and welcome back to Be Rich. Today I have my nephew who is back from university and on leave, so he decided to join, and we are going to discuss a favorite book of mine with an author whom I like, but I don't necessarily agree all the time. Nicholas Nassim Taleb. Nicholas Nassim Taleb is a perpetual black character in the sense that there's a lot of shades of dark and black in him. He takes a contrarian position. So most of us are bulls. We look at markets going up at all times. Nassim Talib is the exact opposite. He would park all his money in treasury and keep shorting the market and wait for one single black swan event, which will give him a huge payoff. He, along with his partner Mark Spitznagel, have had several big hits, the 2008 crisis being the biggest of them, and there have been the Trump election and the coronavirus, which are minor hits. But he scored a big one with the 2008 financial crisis. Mark Spitznagel and Talib are basically Austrian economists who believe that too much money is being printed in the market. Governments are manipulating. Some of this is true, and all this will come to grief. And they look at always disrupting the status quo. So you could at sometimes call them anarchists. But we are now discussing a brilliant book he wrote, Fooled by Randomness. So we are looking at what he means by fooled by randomness. Sashwath is more than halfway through the book. I read this something like 12 years ago, so I'm very rusty on that. But it was a very interesting book, and I read it at a time when I was not doing too well in life, and it appealed to me because it emphasized the role of luck and says that even a very highly skilled player can go wrong because the luck is not favoring him. So he says, while we praise winners and the winner takes it all, there is always a counterfactual history that is possible, where if a couple of events had turned the other way, the entire history could have been rewritten. Some of it I agree, some of it I don't. At times, the force is so much that you cannot turn back. Talib is known to have made very good U-turns in the sense that he was a great advocate of cryptocurrency and then did a U-turn on that. But there is no doubt he's a brilliant and a critical thinker, and who has contributed to a lot of market terminology, what we today know as black swan, skin in the game, fooled by randomness, and several things. We knew these concepts existed. Nobody defined it the way he defined it, both especially black swan and skin in the game. The skin in the game before him was known as, in what we knew as, how much stock a promoter owns. And one of the big rules for me was, if the promoter owns less than 26%, you don't invest. There were some exceptions to the rule, like Infosys and the ITC in Indian stocks. So we will discuss this. So what do you like about Full by Randomness?
So, Fooled by Randomness opens up with a very aggressive but very interesting take, which is that the most successful people you see in your cross section of this thing, that is, in your current time period, the most successful people you see might not necessarily be the best at what they do. So, if you look at it in terms of investing, the most successful investor in your current time might not be the most skilled investor in your current time. So what his argument is that the current investor is completely helped by chance and luck, in the sense that he is able to fit in the cycle very well, but he doesn't possess the skills to maintain this lead over the long term. And he says that the successful investor in the short term takes on heavy risk, heavy leverage in order to be able to outperform his more conservative and greater skilled investors in the short run. And so, what do you think about that idea?
I think largely true. And just because you read Warren Buffett and Charlie Munger, you cannot become Warren or Charlie. And I can, because I keep doing this and I live and breathe in that space,
Yeah.
I can straight away name 100 guys who have been consistent over 30, 40 years. But what he is doing is, I may know 100 great investors, but these are outliers.
Yeah.
There are millions of people who think they can invest.
Yeah.
Not one, not two, there are millions.
Yeah.
In this million, I maybe know 100
Yeah.
who I consider all-time greats.
Yeah.
maybe 200. So, but I can count them. Whom I really consider, I can count them through the fingers. And the sample size is huge.
Yeah.
So, what he says is true in 99.95% of the cases. It is true. But the biggest outliers are, of course, Charlie Munger and Warren Buffett. On leverage, the greatest outlier is the
George Soros.
George Soros, the man who broke the Bank of England.
That.
Then Peter Lynch, Bill Muir, Nick Sleep, John Templeton.
Yeah.
So these are names that just come off the bat. They're just come off the bat, and they have not been successful for few years. All these guys have been successful for 3 or 4 decades. We are talking about a track record of 30, 40 years.
Yeah.
Right?
Yeah.
But what is the general perception, I believe, is that people think that if you read a book on Buffett, or if you follow Buffett, you become Buffett. You have to get into his skin. You have to get under his skin. Very few people can do that. Maybe Manish Pabrai did it. Guy Spear did it, and they cloned him. It's very difficult to clone. Manish Pabrai talked about a company called Raintree Commodities. I went back and forth. And it's a company I wouldn't have invested. I'm sure Buffett wouldn't have invested. But he bet heavily on that company. I don't know whether he lost or made money. But that's a company I wouldn't have touched.
Yeah.
Guy Spear bet on CRISIL. It's a rating company.
Yeah.
I wouldn't have bet on that. So what I'm trying to tell you is, you can name 200 people who have been extremely successful over 3 decades. But I can name more than 10,000 people who have failed in this time.
I think that's the point he's trying to make. And also another takeaway from the book, at least, is that he says your decisions aren't, and this is something Howard Marks, I think, picked up from him and wrote it in his book, the most important thing. And basically, Howard Marks says that you don't judge your investment ability by the performance, at least in the short term, but you judge it by the decision-making framework you use. And he says, so basically, the idea is that you can be conservative and you can be prudent in how you invest. That might not translate to the next big hit in the coming bull rally. But what that means is that is, as the Warren Buffett quote goes, you will only know who's swimming naked when the tide goes out.
Yes, and in that most important thing, Howard Marks talks about, you wouldn't have taken that risk. There's a 1 in 100 whole chance.
Yeah.
You wouldn't have taken that risk. Somebody will take that risk and look like a genius, and you look like an idiot.
Yeah.
That's what happened to Bitcoin.
And people don't realize that there is a probability game underneath any decision you
take. Decision you make, there's a probability game.
Yeah.
I may decide to pass on an investment. It happened to me recently I looked at IRCTC and I passed IRCTC.
Yeah.
For a long time, IRCTC made me look like an idiot. Zomato was a terrible decision. But somebody who bought it and sold it immediately would have made a lot of money. It's luck.
Yeah.
Nykaa is another case. People would have. It was a lottery. I didn't want to play the lottery.
Yeah.
But those who played Nykaa doubled their money overnight.
Yeah.
So they look super skilled to the people. So I will not put it in an iron cast law saying that it's all due to luck.
Yeah.
But in 99.95% of the case, it's due to luck.
And Taleb talks about, this is separate to his book, but he basically talks about the Russian roulette. He says that you can play the game. People don't realize that probability works a lot like Russian roulette, at least in the market. You keep playing the game of Russian roulette thinking that, so let's say the amount of possible, these things are 10 empty slots for one bullet. You might get 9 empty slots, but the 10th one will finish you.
Yes.
And you look like a genius until the 10th one.
Yes.
But the 10th one will cost everything which you've made in the 9
moves.
Yeah.
So this is what happens to the average investor.
Yeah.
And this is what happens to the average individual in life. If you come, that is why they say to make great wealth is easy.
Yeah.
But to keep wealth and pass it on requires a lot of skill. Something which most families lack.
And we're better off taking, or as Howard Marks says and Warren Buffett says, if you have a long enough runway, that is your ability to play these games, and you keep taking favorable odds, you're bound to succeed.
This fellow calls it. Charlie Munger says there's an edge.
Yeah.
As long as I can see the edge, I'll take it.
Yeah.
It may work, it may not work. But out of 10 edges, 7 will work.
Yeah.
So this is where I differ from him.
Yeah.
I make 10 bets.
Yeah.
3 fail.
Yeah.
7 hit.
Yeah.
I become a great winner.
Yeah.
But the fact is, as Kahneman and Tversky said,
Yeah.
you ask me my big winners, I won't know.
Yeah.
You ask me my big losers, I'll tell you no.
Yeah.
That is psychology.
And I think the takeaway from this is not to be disheartened if your so-called investments don't perform well in the short run. As long as you ensure you follow the
Rules.
Yeah.
So if you know, and people ask me how I have been a persistent bear in
Yeah.
spite of looking like an idiot
Yeah.
from the market, the way it ran up from 12 to 18,
Yeah.
and when it dropped from COVID
Yeah.
from 11 to 18,
Yeah.
because I knew it was against the fundamentals.
You took a bet.
That's a bet, and it looked like an idiot.
Yeah.
I stayed out of the market,
Yeah.
and I looked like an idiot.
While you did index on the side.
Yeah, I did index. That is very little.
Yeah.
I did put on some money when I was.
And you always said you should index regardless of what's happening.
That is there.
Yeah.
But I'm saying as a major investment,
Yeah.
I didn't make much, except in 2020 I put in a lot of money.
Yeah.
And I pulled out very early.
Yeah.
That is, by late 2020 I had stopped investing.
Right.
And I stayed till it went up, and then it started to correct. I started putting money again.
Right.
Very conservative.
Yeah.
I would have made less money than somebody who put in everything in that period.
Yeah.
But I neither have the pain now, because
Yeah.
though the index may be up, a lot of stocks are negative.
True.
And one of these stocks I bought is Berkshire Hathaway.
Yeah.
And it's still positive. So that's what I'm saying. Nobody can get 10 out of 10. You get 7 out of 10, you take it.
But as you said, a loss hurts twice as much. And if the index had slid from whatever 12,000 to 7,000 again because the Fed decided not to pump so much,
then that is where I come with Talib.
Yeah.
See, I didn't believe the amount of money they printed and spent, I thought was excessive.
Yeah.
I stayed out.
Yeah.
So I looked like an idiot.
Yeah.
But if the Fed had not done it, the market would have been at 7,000.
True.
See, you need to help people. You don't need to help fat, rich kids.
That's what the Fed is doing.
That's what the Fed ended up doing.
Yeah.
It's something which I didn't want to do.
Yeah.
And if it had been 7,000, I would have looked like a genius.
Yeah. You played the probability game.
I played the probability game. This is what he's trying to say. But that does not affect my skill as an investor.
Yeah.
Because overall, I'm still beating the market very comfortably.
And your runway has been for the past 20 years in the market, 25 years.
Yeah, but very successfully last 16 years or 17 years. My runway has been very long.
Yeah.
It's been from 1990s, early 90s.
Yeah.
But my real successful investment has started from 2004-5. So that is 2005-6 to wherever we are
About
now.
18 years. Yeah.
About 18 years. I have not made. Of course, I know the 3 big mistakes I made. But I don't know the countless winners that have brought me up to this point where I'm positive.
Yeah.
Yeah.
So that's about it for Fooled by Randomness, at least for now. I'll
Yeah.
come back to you if I have more ideas.
We will discuss this in greater detail.
Yeah, and I think we should go through the sequence of books he's written, because I think he's written about 4-5 books.
Yeah, he's written Black Swan. That's a magnificent. You read Black Swan?
Yeah, Anti-Fragile, Skin in the Game, Fooled by Randomness, Black Swan. So 4
Yeah.
books, yeah.
And then Prospectus's
Yeah,
Bed.
the probability book.
Yeah, the Prospectus's Bed.
Yeah,
He's a dark humor. There's a lot of dark humor in him.
yeah.
Anyway, I hope you guys enjoyed this discussion. Thank you for watching Be Rich. If you like the content, please consider sharing with your friends and relatives. Kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not receive a notification when I put out a new video. Once again, I thank you for your support for Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.